welcome back. You're watching Buy Now, Sell Now, and let's get connected with Anand Rathi Wealth Management because need to know in terms of growth and number trajectory, what's the way up. We are joined by Mr. Rakesh Agrawal, CEO, Anand Rathi Wealth. Rakesh, hi, morning. Welcome to the show. All right, so Q4 FY26, AUM was down almost 6%. How much of this was from the market correction, and how much were the net inflows in Q4?
So we had a positive net inflow, strong net inflow, about 3,000 plus crores. But despite that, we had a 6% drop in AUM. And that means that the market impact was about 10% down. And this is temporary in nature. So as and when the market recovers, the values of the AUMs will go up.
Mr. Rawal, with the PAT growing faster than the revenues and the margins remaining strong, are we really currently at the peak profitability, or is there still room for operating leverage in FY27 and sustainability?
So there is some room, not too much, in terms of margins improving from here. So significantly, profit growth will follow revenue growth in 27 and beyond. So we see a fairly strong 27, both in terms of revenue and profits, which is also there in our guidance.
When we look at net inflows, they have increased in single digits for FY26. Now, is this a temporary slowdown, or since the markets are volatile, how are you reading the investors' behavior right now?
Our net inflows continue to be strong. There were some 13,000 crores this year, and we expect this to be better for next year as well. And as far as the volatility is concerned, volatility has been there in every year of investing. Every calendar year, the markets move up average 10 to 15% from peak to trough. And that's part of the risk that investors take in this journey of investing. We haven't had any. Well, I would say this war has created some levels of disappointments because the year has ended a little disappointingly for returns for this financial year. But investors are seasoned people, and they've taken it on the chin, and they're very, very positive for the next year. We believe that, and if you look at our past as well, our results and performance has been market agnostic. For example, the last quarter itself, the markets have been badly impacted, but the results have been fairly good. So when you have long-term investing, markets do play a role, but a limited one. Strategy plays a larger role.
Mr. Rawal, but there has been a sharp surge in your other income in Q4. Was this a one-off, or if so, what were the constituents?
Yes, there were. So we have some investments in our in the NBFC Anand Rathi Global, and there were some valuation gains in that, which are one-off, and therefore what we are really looking. And there's some one-off costs also in terms of stock options for management. But we are really looking at the growth without the one-offs. And the growth without the one-offs for our profit is in the range of 29%, and revenue is 22%.
When we look at the AUM mix, what does the AUM mix look like at the present current juncture? Are you planning any structural changes in your products, or overall mix catering to the turmoil in the markets is the same?
No, none at all. So the three elements or the four elements are equity mutual funds, which are 55%, structured products, which are about 29%, debt of about 4%, and other assets of about 14 to 15%. So that significantly remains similar quarter on quarter. Yeah. So there's no significant change in the product mix. We continue to be focused on trying to deliver a 14-15% return to customers with a beta of 0.6. And therefore, the mix to do that has been quite steady all these years, and we believe will be steady in the future as well.
All right, Mr. Rawal, thank you so much for joining us and weighing in on the numbers and the growth roadmap ahead. We'll let you go on that note. But up next is an exclusive round